Welcome to video number 2 in the How to Buy Your Home Step-by-Step series. We are covering the crucial steps most people overlook that could save them time, stress, and thousands of dollars. This video is all about searching for your home and getting prepped for the purchase. And by the way, if you haven't watched the introduction video, which is number 1 in the series yet, I've linked it here. Suggest you watch that video before this. Hey, 𝗩𝗶𝗱𝗲𝗏𝗀𝗄𝗧𝗏, the managing broker with the Rhymes Group here. We specialize in helping home buyers and sellers just like you take control of the real estate process with total confidence and ease. After watching this video, if you have any questions about anything that I covered, feel free to reach out. I've included my contact information in the description below. That said, here are steps 1 to 6 covered in this video, which is all about the home search and the needed prep. Step 1 is about the home search, the hows and whats. 2 is about getting ready to own your home. And 3 is checking how much home you can afford, your affordability, basically. And number 4, picking your real estate agent, the reason why this is so important and what to look for in an agent. Number 5, what to be aware of with respect to the down payment and closing costs. And the last step, number 6, as part of getting prepped, is to get pre-approved. Let's get started with step number 1, the home search. This is the fun part. I love it. Most buyers start their home search online and usually would be on the online portals like Zillow, Redfin, Trulia, to name a few. If you are a buyer, after looking at houses online and possibly visiting a couple of open houses, the next important thing for you to do is to pick the neighborhood where you want to live. For many buyers, it comes to whether the neighborhood gels with their vibe and what access they have to the amenities. Are there any parks close by? Having a good school district and commute time to and from work are a few criteria they hone in on. Once you start looking for homes, I suggest that you drive around different neighborhoods and see which ones provide a community feel and one which has a shared commonality for the residents that live there that you resonate with. Besides picking the neighborhood and having a flavor of homes, either online or by visiting them in person, you'll have to do the most important thing, which is to come up with your needs and wants list. Now, this is where you sit down with others who will be living in the home alongside you and ask about what is important to them and come up with this list like this. It should have the classification, features, and priorities. And priorities are actually between 1 and 10, 10 being the highest. The higher the priority, the more of a must-have that particular line item becomes. Of course, this list is just a starting point for you to list whatever you want in the homes that you're looking at. You can always prioritize the things higher or deprioritize them as your home search evolves. This is absolutely important to be firmed up during the initial stages of your home search. Remember, the 3 pillars in the home buying which we covered in video number 1 is efficiency, cost savings, and having a totally stress-free experience. You coming up with the needs and wants list will make the home search and buying process so much more efficient and to an extent make it stress-free as well, because you'll know ultimately what you're looking for so that you're shooting towards your target instead of just kind of being everywhere. Step number 2 is to get ready to own your home. While your home search is on, you want to have a good handle on your finances. You need to get a good handle on 4 things primarily. Number 1, do you have a steady income? If you're employed, then that may potentially mean that you have steady income. Now, if you're in business for yourself or work on a commission basis, then your income can go up, down, and be all around. Something to be aware of when you apply for a loan or a mortgage is that this may cause lenders to ask you for additional eligibility information, so be prepared. Number 2 is your DTI, the debt to income ratio. This is how much money you pay every single month towards your debt as a ratio to your gross monthly income. It helps you assess your credit worthiness. This should be less than 36%. Now, when the DTI is over 36%, the lenders typically ask for additional information to ensure that you meet the eligibility criteria. Number 3 is how good is your credit? Have you checked your credit scores lately? if you are getting a loan, the minimum required credit score for a conventional loan is 620 as of this recording. And if it's an FHA or a VA loan, the scores could be relatively less compared to a conventional loan product. If you haven't checked your credit score lately, I strongly suggest that you do that. I've included a few resources below in the Getting Ready section for you to get started. Now back to the credit scores. The higher your scores, the better rates that you qualify for. And this could literally save you thousands over the life of the loan. Then number 4, borrowing from friends and family to buy a house. This is another rich source of funds that you can tap into to purchase your home. I have provided details of the whats and hows when borrowing from friends and family in the Getting Ready section in the description below for you to refer to. Step number 2 that we just looked at about getting ready for your home purchase will take a few hours for you to complete, which should provide you a good handle on the things to be able to take it further. So this is crucial and important, okay? That takes us to step number 3, which is to check your affordability, which is how much home you can afford. This is an important step in the home buying process because it'll let you know whether you're going to be comfortable making the monthly payments or if you will be stretched thin. Make sure that you plug in your salary details for you and others who will be owning the home along with you. I'd use the net income in the calculations for affordability, for paying the principal, interest, taxes, and insurance, the HOA and utilities, if you will. You'd want to factor in all these home-related expenses and make sure they are under 30% or less of your net monthly income. Now, I've provided access to a home affordability calculator below in the home affordability section for you to check. Step number 4, the granddaddy of all, is to meet, interview, and pick your real estate agent. You'll pick your real estate agent based on the referrals from friends and family, or you looking for one online. Now, here are a few things that you should keep in mind as you pick your real estate agent. Super important. You want an agent who is not only familiar with your local market, but also is able to negotiate effectively and help you get into the dream home of your choice for the best terms and price. And more importantly, someone who's super responsive and has a great handle on the home buying process from start to finish and knows the various moving pieces. Besides, also has a great network, their ability to connect you with lenders, inspectors, contractors, to name a few. Also, read up on their online reviews, talk to their previous clients to get to know the good, bad, and ugly about working with them. You want to feel comfortable about how well they will come through for you. Suggest you do your due diligence here. And on top of all this, pick a real estate agent who has your best interest at heart. Once you picked your agent during your buyer consultation, you will provide your agent with a list of criteria, that needs and wants list that you have with you. Now, in addition to the amenities, it may be the minimum number of beds, baths, the number of car garages, a large yard, small yard, what have you, including the school district and others that you would have sat and thought through. Take the time to fill the agent in. We at the Rams Group, for instance, do a detailed educational session with our clients at the start, totally free by the way, to understand all of the requirements up front. Now, this includes their preferred method of communication, and the intent behind this meeting is not only to educate them, but to enable buyers understand the home buying process from A through Z, and specifically be aware of the gotchas and what to look for when buying a home. Now, switching back, once your requirements are understood by your agent, they will schedule showings of homes that meet your criteria. You can walk through and see them in person, and you want an agent who spends more time up front, who understands specifically what your needs and wants are, so that they have your priorities straight. This helps introduce several efficiencies in the home search and buying process you'll not believe. Basically, your realtor needs to be boots on the ground doing the actual work, carrying out the search for your ideal home, making this very important. With how to pick an agent out of the way, I wanted to briefly talk about how the buyer agent gets compensated for helping you find and own your home. Starting August of 2024, the way the buyer agents get compensated has changed. I have included links that talk about the details that you as a potential buyer should be totally aware of. Also suggest that you visit facts.realtor for the full lowdown. Now, the reason this is important is you may be responsible for covering none of the buyer commission, some portion of it, or all of the buyer commission that is due. It would make sense for you as you interview your buyer agent to ask them to explain what the 2024 NAR, National Association of Realtors, changes are and what you should know. And they'll be happy to explain. Step number 5, down payment and closing costs. The down payment is a percentage of your purchase price that you're paying at closing. The remaining amount, which is the purchase price minus the down payment, is what you'll be borrowing from a lender, which you'll make the mortgage payments on. So essentially the down payment plus the mortgage amount is the total purchase price that you would pay. Just for context. To purchase your home, especially if it's your first home or your primary residence, the typical down payment for a conventional loan is 20%. For anything less than 20% down, you'll have what is called a PMI, or private mortgage insurance, something for you to be aware of. Now, it would be absolutely better to avoid PMI because the payments that you make towards the PMI do not go towards your principal or the interest, and it's kind of a dead expense. Your lender should be able to go into all those details so that you are fully informed. Now, moving on to closing costs. What are they? The bank that you get your mortgage from will require fees, mortgage points, insurance, prorated portion of the property taxes, and others. And these typically range from 3 to about 5% of your loan amount. Now, these are separate from the down payment. From a planning perspective, it helps having these funds ready at your disposal. Now, that said, here's the tip. With the home prices the way they are, including the current interest rates, you may or may not be able to afford a 20% down payment. And based on your specific situation, your credit history, your employment history, etc., the lender that you're working with should be able to make suggestions about the various loan products that they have access to be able to help you out. That takes us to step number 6, which is getting pre-approved. Here's where you contact a bank, a loan officer, or a lender to help you get pre-approved for a loan. If you're going in for an all-cash purchase or borrowing funds from your friends and family, this step, number 6, can totally be skipped. Your real estate agent should be able to recommend several local lenders in your area that you could potentially work with. The lender you pick will want to look at several financial documents, including your tax returns, W-2s, pay stubs, your bank account statements, including your investments. From all those, your lender should be able to determine the maximum loan amount they feel comfortable lending to you at the prevailing interest rates. Now, the lender will provide you with a pre-approval letter for the maximum amount that you can borrow. Now, this pre-approval letter is critical as many sellers will not even accept your offer without it. Once you get pre-approved, it is important that you do not accumulate any more debt from the time you get pre-approved until the time you close on the home. Yes, buying a new car or that chandelier on credit can wait, okay? The reason that this is important is any more debt can affect your debt to income ratio, which in turn can affect the maximum loan amount that you qualify for. This pre-approval should give you an idea of how much money you can borrow in addition to the down payment that you'll be bringing to the closing table. This is a crucial step because not knowing how much of a home you can afford make you go look at homes and fall in love with them that maybe a tier or two above the price point that you can afford, making it not a totally good use of your time, okay? Woo! We covered a lot. As always, feel free to reach out should you have any questions about anything I've covered in this video, and I'm happy to explain. And that takes us to the end of this video. See you next in video number 3, which is all about making offers on homes that you have narrowed down. See you there.